With me this time is Neil Young, the Managing Director of Elixir Energy, an Australian oil and gas play with assets in Mongolia. Neil, how are you?
I'm very good, Merlin. Thanks for inviting me again. And just to add, we also have assets in Australia where we've been pursuing a fabulous program recently with lots more to come shortly. But I won't bore the audience with that, and we can turn to macro issues.
Well, before we do that, I mean, Of course, I looked at your Daydream 2 well, which you drilled in Australia kind of at the end of last year, and it looks as if you hit over 600 meters of net pay, and it all looks really exciting. But then I looked at your share price, and the share price is barely moved. It's still bubbling along the bottom. And I just wanted to ask whether that was a function of kind of a general dislike of oil and gas companies in the sector, or the fact that the market is not excited about oil and gas. I just wondered if you could put your finger on it, or kind of work out why you haven't had the price response that something like your successful well might have stimulated.
I think it's a general dislike for resource stocks rather than oil and gas stocks just now. In Australia in particular, in recent years, there's been the fabulous performance of battery metal stocks, and really lithium being a primary one, but the nickel price fall and the lithium price fall have meant that the stock prices of many companies has fallen by significant amounts, and that has obviously affected confidence. It's also affected the accessibility of funding for the overall sector, and people's moods are negative. What I find for stocks like us, which are fairly liquid, is the good news isn't a buying queue. It can often be a selling queue, because people are stuck in other stocks that don't have liquidity. They might need some money to buy the Christmas presents or go on holiday, and the liquid stocks tend to be a bit of a piggy bank. So that is a better position than being the illiquid stocks, because they are in a position that if they need money, they probably can't get it. And companies like us are in a position that when the wind turns even slightly, liquidity will be rewarded. And obviously we look forward to that. But we are in a bit of a malaise just now for resource stocks generally. And I assume you're seeing that in London and Canada as well. But certainly that I don't look at those closely, but that's my impression in Australia.
Yes, I think in this country, in the UK, there's a kind of a special distaste for oil and gas stocks. I think it's a small portion of the investment community that's kind of open-minded about investing into oil and gas. So I think that's where I was leading. Just seeing whether the trends were similar in Australia or not. When I look at nickel and lithium as markets, I mean, of course, nickel, you've got this extraordinary step change in the ability of the Chinese companies to do high pressure acid leaching in Indonesia, which is kind of strip mining Indonesia and kind of putting the nickel market into oversupply. And lithium is an incredibly immature industry. So there's lithium sticking out of the ground all over the place, whether it's in Australia or Brazil, Canada, North America, wherever. Once people put their mind to producing lithium, there's certainly no shortage of it sitting close to surface. So it's just a logistics thing. But it's so easy to put all commodities into the same basket. And the oil market is such an extraordinary industry, because it's so huge. And the Americans have been just fantastic at increasing their production. But a lot of these assets are tired, and the money's not going into exploration. And perhaps we can unpack a few of those things. But you've just been in the States, haven't you?
Yeah, I was there for 2 weeks. 1 week in Houston, I have an annual conference called NAPE, which is all about sort of deal making. And from Elixir's point of view, we were talking to a few potential partners to our Queensland play. As you say, the American oil and gas market is so dynamic, so entrepreneurial, and I mean they've got great geology, we know, but they've been producing for 170 years and still find ways to increase production. I mean, U.S. oil production's never been higher, and they felt that it peaked in 1970, and now we are 54 years on. I mean, gas production is incredible. That has suppressed prices recently. US Henry Hub is just in the absolute toilet at just a little bit above $1.50. And that's really a function of a number of things, one of which is US dynamism. There's some other political and market factors as well, and I'm sure it will correct in due course.
When you say it's in the toilet, I mean, it's at about $1.50. Is that a bad thing? Doesn't that stimulate investment into the States? Doesn't that stimulate... Doesn't manufacturing and industry go where energy prices are low?
They do, and it's logical for your fertilizer plant or someone who needs methane as a feedstock to go to the US. But I suppose what it has stimulated are a lot of LNG plants to be built, largely on the Gulf of Mexico coast, some on the East Coast, but interestingly, none on the West Coast, because basically you can't do anything in California and its northern neighbors. But interestingly, there are LNG plants being built on the west coast of Mexico. And my view is that when they come online and they're well positioned to supply Asian markets because they avoid the Panama Canal, etc., that will take a lot of pressure off US gas prices down. And the current Biden administration pause on approving new LNG plants in the Gulf of Mexico doesn't apply in Mexico itself. And so they can take a lot of pipeline gas, in particular from West Texas. And it's really West Texas associated gas from the Permian Basin oil production, which is really a waste product. It's dumped into the gas market. It suppressed prices. But once that's taken away, liquefied, and shipped to Asia, then that should be a significant foot off the pedal. And $1.50, it's not going to go to Australian prices, but it might go to $2.50 or something that will sustain US gas producers who are incredibly efficient at, for instance, taking dry gas out of the Marcellus at very, very low prices.
Interesting. And is the pipeline network already there to go from West Texas to the west coast of Mexico?
So there's a lot of gas gets shipped to Mexico anyway from Texas. And to take it to Baja California is not a lot of new pipeline builds, really. Building pipelines in Mexico and Texas is somewhat easier than it is in, say, Canada, for political and labor costs and other reasons. And so it's really when the liquefaction plants got built, and I can remember when these projects were first mooted and everyone's scoffing that it never happened, but location is trumping everything there as it often does.
And you're saying that they can't get built in California or Oregon or Washington State because of...
Yeah, well, I've never even heard of someone proposing an LNG plant in California because you just can't do anything. I mean, as you might know, there was some... I mean, California has been a prolific oil producer onshore, even offshore, years and years ago. But I think in the Nixon administration or something like that, there was a spill, and then nothing was ever allowed to be done again. These states are all rich. The coastlines are all occupied by very rich people, and it's a pretty much iron law that oil and gas developments don't happen where there are rich people whose views might get spoiled. I mean, West Coast Canada, the Shell are nearly finished an LNG project there, but at one stage there were at least half a dozen other LNG projects proposed for West Canada. There's a lot of cheap gas in Canada, but equally there's a lot of expensive labor and native issues and engineering issues, in effect taking pipelines over the Rockies to the coastal provinces.
And when you're in the States, when you're in Houston in that conference, what was the mood like? What were the people like? Give me a bit of colour on that, please.
I mean, the people are very entrepreneurial. I mean, what you see in America, you don't see in many other countries, is people can be second, third, fourth generation oil and gas people. Given the amount of capital and the amount of dollars involved, there's not a lot of people in this industry. And one thing that is apparent is although US oil and gas production's never been higher, the industry feels a bit old in terms of its personnel. And it feels a bit still old-fashioned in terms of being, basically people like me, old white men, rather than you step out the doors and into Houston, and it's an incredibly diverse and interesting place. But inside the conference hall, it's a bit more traditional America, and it feels old. And then even meeting investors on the East Coast, those investors who are interested in oil and gas, and you said in the UK that's not everyone. They tended to be, again, fitting that sort of demographic.
I think it's a function of the education that we've had in the last 30 years. That there's been this basic drumbeat that oil and gas is bad, and that batteries are good. And I think that presumably when you go to university and you're given choices, or in a career, very, very few people would want to go into something that's, inverted commas, bad. And I know for a fact that in kind of some of the universities in the UK, they're doing everything to kind of expunge the words oil and gas or petroleum based. They have to, it's now, I think they call it fluid dynamic studies or something like that.
Well, I mean, that is true. I suppose that from time to time, the industry hasn't helped, though, because in the last 20 years, there's been 3 oil price falls and big companies go and fire a lot of people. And that they could have been better at sustaining people's careers, because people who are fired often leave the industry for good. And then you have this sort of winnowing effect. But you're right in terms of people don't want to recognize the reality that demand for oil and gas has never been higher. Now, there are certainly views that they will decline, but any decline in oil will be gradual, and most people's views are that demand for gas will increase for decades to come. And that's the energy transition is hard. I mean, these are energy dense, useful products. There's a massive multi-trillion-dollar sort of sunk capital involved in producing. Attempts by regulators and politicians will fix the problem by suppressing supply. Supply is not the problem; it's demand. But no one wants to suppress demand because demand are people who vote, and so that those two things don't square, but they will have to square in due course.
And the oil price is relatively steady, kind of the high 70s. It feels as if it's kind of as if it's very natural, as if there's no stress in the system. It just feels that the oil will keep flowing no matter what, and that we don't really need to plan ahead for the future because it's always going to be fine. But it probably isn't that straightforward, is it? There is probably scope for a shock and declines in supply going forward.
I mean, absolutely. As most people in this sector know, and was observed by the CEO of Occidental recently very pertinently, the discoveries haven't matched demand for many, many years. Now, there have been some great discoveries in like Guyana, for example, but they don't replace the 100 million barrels a day that are consumed just now. So the market does feel balanced, and that's even with OPEC taking barrels off the table. I think in the short term, the Red Sea, in effect, choke point has illustrated that choke points generally are real, not just theoretical. Now, the Red Sea hasn't really affected oil prices much. I think probably the Panama Canal and the droughts there have affected LNG shipping costs probably more than the Houthis have affected oil prices in the Red Sea. But what this illustrates is that if, for instance, the Middle Eastern war escalated and Iran got involved directly rather than through proxies, then and you started to affect the Gulf, then oil prices could double or treble easily. I don't think the SPR in the States has been, a lot of oil was taken out of that to suppress prices, and that oil hasn't got back in to where it needs to be. And in terms of outside China, there's not a lot of physical, strategic reserves like that. And the Chinese. Can
I just kind of go back? You said oil prices could conceivably double or triple. I mean, that's a huge leap upwards. I mean, $160 a barrel, $240. You think that's conceivable?
The amount of oil that comes out of Saudi and goes to the Gulf is sufficiently large for that to be a possible outcome if a war erupted in the Gulf, which, as I say, Iran has demonstrated hostility and arguably engendered the current situation in Gaza, and things could escalate and get out of hand and have those sorts of consequences. Now, those sorts of spikes would have a rapid effect on economic activity, and then they tend to self-correct through a recession. That's just what happens when we've seen that sort of spiking in the 70s and in the first, the Iran Revolution in 1979-80.
Yeah, I mean, the oil price did go from whatever it was, $2 to $8, but that was off a much lower base. But perhaps, yeah, well, there we go. I mean, that would it led to the first real efficiency drive, didn't it? Suddenly cars and everything got redesigned to be more efficient and more fuel efficient. And that's
when America passed a 55 mile per hour speed limit. Can you imagine Congress agreeing on that just now? No way. But yeah, I mean, efficiency would respond to that, and then the cycle, as we discussed on the last chat, Jevons paradox would come back, and you'd find more uses for your cheap energy.
And what about Russia at the moment? Presumably their production hasn't fallen off at all, but they're just selling it east.
Yeah, I mean, they're obviously selling it to the Indians and the Chinese primarily, who are getting discounts and liking that accordingly. I think in terms of Russian gas, the gas that went to Europe for many, many decades is not going to go to Europe probably ever. And the Power Siberia 2 project to instead take that all the way from West Siberia to China is going nowhere either. It's enormously expensive, and the Chinese are, although they're political allies, are not economically stupid, and would only, if Russia's desperate, they will only pay a low price, and that's not palatable to the Russians. In terms of Russian LNG, the Arctic LNG expansion has been retarded by sanctions, but not stopped. And generally, people will find a way around those sorts of sanctions. But in terms of new LNG growth in Russia, that's a ways away. I mean, I can't see on Sakhalin really developing more than it already has. And then, in terms of taking gas out of Western Russia, that's hard. You need to build pipelines and really political projects, not economic ones.
But effectively, okay, the growth has come out of the LNG in Russia, but the oil molecules are still getting into the kind of the global bathtub.
Yes, yeah. I think sanctions haven't really changed volumes; they've just changed pricing outcomes. For Russia gets less, and India and China get good deals.
Yeah, interesting, good, and you talk about kind of choke points, and as you said, Vicky Holler, CEO of Occidental, was talking about the lack of discoveries going forward. So, are you bullish on the oil price? Okay, there's risk to the upside through the choke point or kind of oil shocks, but do you feel that this level of $70 to $80 can be maintained for a long time? Are we looking kind of 1 or 2 years at this level? I mean, I know it's dangerous and you don't have a crystal ball.
Yeah.
But just in terms of the kind of the forces that are at play, because there is to a degree economic weakness out there. We're not in the kind of gangbuster territory with all countries going for it.
Yeah. I mean, there's a bit of a mixture. I think the American economy is just absolutely booming, and so that's led to a sort of pause on the expectation of reduction of interest rates. On the other hand, the Chinese economy is not booming, and leadership's more focused on probably geopolitics rather than economic growth. And then demographics are the most powerful but long-term force in economics and politics are irredeemably getting worse there. I think India is still growing. Economy now the world's probably in the top 5, I think. And when you've got that population size and growing at 7% a year, that's going to be a big call on oil demand and just grow exponentially and hopefully offset the economic weakness in China. I mean, Europe is it's obviously a lovely place to live, and I've lived there, but it's not the big factor that it was. I mean, Africa, even with its problems, still got population growth and economic growth, and we'll call on oil as well. So you combine that with the lack of new supply and then depletion. I mean, you think of depletion in conventional fields as, let's say 4 or 5% a year. But in the US shale field, it's, probably 2 or 3 times that. And a lot of the new growth in the last 10 years has come from that incredible US dynamism. But there is a lot of sort of running to stand still there. These things, can't go on forever. And unless EV take up is much higher and replacements for oil are found more quickly than they have been, then the pressures would suggest that in the medium term, however long that is, that oil prices could well rise.
Well, there we go. Obviously, it doesn't shock me to hear an oil man saying that the fundamentals for the oil industry are are positive. But I've certainly, I look at the key commodities that are essential to our modern life, and I'm firmly behind oil and gas, and copper, and to a degree gold as well. I see that as a real store of value. But anyway, just one thing, going back to the US shales, I heard a podcast talking about the proppants and the way that they had changed over time from importing these ceramic beads, these very sophisticated proppants, and then they found actually with time that they could use just kind of sand that they could kind of dig up locally, and so the whole cost structure of the tight oil and gas industry in the US has changed because they're not bringing in these proppants from large distances. I just wondered, because you're effectively looking at a tight oil and gas play, coal bed methane in a Daydream in Australia, are you going to be able to go take in these new US methods and just go straight in with a local sand? I mean, there's probably no shortage of sand in Australia.
I think in time, yes. I mean, what we're about to stimulate our well, and we have ordered ceramic proppants from China, and then what are called micro proppants, also made from ceramics from the States. That's because we need this well to work, and the cost of the proppants in that instance is really not as important as getting a positive outcome. Now, proppants that are made from ceramics are expensive, like $1,000 a ton or something like that. Then you've got the cost of shipping them halfway around the world. But as you get into a development stage where clearly the Americas already are at, you've got to face economic questions of, okay, well, what extra productivity do I get by having higher cost proppants versus getting a slightly lower outcome but much cheaper proppants? And they've clearly got to the point that they've traded off quality for price, and we've even seen in the transition going from ceramics to very high quality sands that were shipped halfway across America, to then going, hey, no, there's plenty of sand next door. It's not as good quality, but we avoid those shipping costs. So it's a function of economics and a demonstration of the America's can-do spirit that is so admirable. And I think in our play in Queensland, knock on wood, when it works, that we will see proppants replaced by local sands. And what that also does, it reinforces to people that this industry provides benefits that cascade throughout the local economy. And so you come into Texas, and everyone loves oil and gas because everyone benefits from it. And what we certainly see is the political benefit of spending money locally when it makes sense. And typically it does make sense because the logistic costs become a large part of these things, particularly some of these fracs in the States. You're putting tens of thousands of tons in a single well. So, it's a lot of proppant. So I think great analog in the States, and one that we would like to see replicated, and in this success case, we will see replicated in our extensive unconventional deep tight gas play in Queensland.
Well, Neil, thank you very much. It's been a fascinating romp around the world of oil and gas, LNG and proppants and choke points and risk. Thank you very much, and I look forward to another catching up with you in a few months' time.
Thanks also, Merlin, and great to catch up, and look forward to doing so soon.